नमस्कार मंडळी. तुम्हा सर्वांना गुढीपाडवाच्या खूप खूप शुभेच्छा. And if you're like, what's up? What did Rachana just say right now? I just wished everyone a very, very happy new year. So today's video is special as per our tradition. Gudi Padwa is one of the s- top 3.5 muhurtas, which is considered as auspicious days to make some investment. And whenever it comes to investing, a lot of people definitely give gold as one of the priorities of while investing. But we have talked about this. We have talked about investing in physical gold, or be it gold mutual funds, or gold B's, ETFs, or even SGBs. But what is today's video all about? Today's video is about how to find top 5 SGBs in 2026. Is there any specific way to do that? The answer is obviously yes. But the problem right now is that there are no primary issues for SGBs. And if I'm talking about buying SGBs from the secondary market, there are more than 40 SGBs that are trading in the secondary market. And if you pick the wrong one, your returns could be significantly lower. So in today's video, we are going to focus on 5 key factors. First of all, we are going to talk about SGB taxation. How has it changed post budget 2026? We are going to talk about the concept of yield, which is extremely important in SGBs. We are going to understand about how to select best SGB in 2026. We'll also talk about the 5 top SGBs in 2026. Ultimately, we'll talk about some risks and one bonus point towards the end. So keep on watching the video till the end. Before we move on, I just wanted to thank everyone for giving an amazing response to my technical analysis using AI webinar. It was a full house and people across the globe attended it. I felt only bad for one point because many more people wanted to attend it, but because of the limited number of seats that I have in my Zoom meeting, I could not accommodate everyone. And to solve for that, I am announcing batch 2 of our technical analysis using AI webinar. It's going to be conducted on the 22nd of March, 11 a.m. to 1 p.m. And just in case if you want to have a glimpse of what magic AI can do, so for example, if I were to draw a trend line, of course manually I can draw it, but I can also code it using what? Using Pine script and get these trend lines on your screen. And if you have some strategy and if you want to automate that, how can you do it? Just have a look at this. You can generate such buy sell calls using your own strategy and automate it using again what? Pine script. But just in case if you're like, I don't know how to code, let me tell you a secret. Even I don't know how to code, but you can do all of these things using AI and put those codes in PineScript in TradingView. In this webinar, I'll not only teach all these points to you, but I will hand over all the Pine scripts to you as well. Just in case if you miss the webinar, you will also get a recording for 7 days. So hurry, seats are limited. Link is there in the pinned comment and in the description box below. Now let's understand about a very important change that has happened in the budget 2026 about taxation of SGBs. Now if you already have the SGBs that you have bought from the primary market, and if you are wanting to sell it at maturity, okay, at maturity, that is let's say after 8 years, then it will still be exempt. No problem with that. But if you have bought it from the secondary market and if you're planning to sell it anytime on or after 1st of April 2026, those SGBs, the gains on that basically will be taxable. The capital gains will be taxable. So just remember this, that even if you're going to buy, let's say before 1st of April, if you're buying it from the secondary market, and if you sell it in the secondary market, or even if you hold it till maturity, all these capital gains are now going to be taxable. Question is at what rate? If you are going to have a short term capital gain, it will be taxed as per your tax slabs. Okay. If you're going to hold it for a long term, so if it becomes a long term capital gain, then it will be taxed at 12.5%. Okay. But when I'm talking about SGBs, is only capital gain attracted? Answer is no. You will receive interests also. You will basically, that is called as coupons, right? Semi-annual payment is done. If you know a lot about SGBs, and if you have watched this video of SG, oh god, what is the thumbnail? So, anyways, if you have watched this video on SGBs, you already know about the basics, right? But SGB semi-annual interest rates are paid out. In that case, whatever interest you get on SGBs, that is taxed again as per your tax slab rate. Okay, so just to quickly sum it up. Interest on SGBs, coupon payments on SGBs, taxed as per your slab rates. Short-term capital gain, again as per tax slab rates. Long-term capital gain, more than 1 year basically, 12.5% of your gains. Okay, so that is how the taxation is going to be done. Now, important point is about how do you focus on certain key parameters, concept of yield, which becomes extremely important here. That is what we're going to discuss in the next section of the video. Now let's understand the concept of yield with the help of an example. Okay, now first things first, yield in layman language can be as good as whatever total return that you are going to get on SGBs or on bonds. Okay, I'll try and simplify it to the best possible extent. Okay, let's take this example that gold value per gram is right now 16,000. You might be like, why haven't you taken it per tola or per 10 gram? For a simple reason, SGBs are equivalent to 1 gram of gold. Okay, that is the reason why I've taken it 1 gram. So 1 gram currently, let's say, is at 16,000. But currently, let's say some SGB is trading at 15,500. You are like, oh, finally, either you buy 1 gram of gold like direct gold, or you buy 1 gram of gold in the nature of a bond. Ultimately you are buying 1 gram only. Ultimately you are buying it of the same purity. Okay, then if I'm getting the bond at 15,500, it is as good as I'm getting it at a discount of 500 rupees. And you'll be like, Rachna, seriously such discounts do exist? Answer is yes, and I'm going to show that all these things in this video only. Okay, so keep on watching the video. Okay, so first component of that yield will be what? Discount to market price. That is the first component. Second component, I've already told you some time ago. What? Interest. 2.5% interest that you're going to get. That is also a part of your total return. That's a part of your yield. Okay, so that is the second component. And third component, of course, will be the capital appreciation in gold prices. So currently, let's say whatever gold is trading at right now, let's say after 3 years, after 5 years, ideally, gold prices might have increased. Typically, it is said that gold acts as a hedge against inflation also. So minimum whatever is the inflation rate, that is the return at which you can expect gold prices to increase, okay, on a longer term basis, right? So all these three combined together. What three combined together? One more time I'll repeat. Number one is whatever discount you can get. Number two is the interest or the coupon that you're going to receive. And number three is the gold price movement. All these three put together will be yield to maturity. What is the one point you have to remember? Higher the better, because it's as good as return, right? So higher you get, better it is going to be. Now, if I were to actually understand where is the total list, where can I get to see all the SGBs? Is there any authentic, reliable website? Of course, that's the NSE website for you, right? Here, if you see, you can see a long list, more than 40 SGBs, which are listed on the stock exchange. You can see 33 advances, 7 declines, 6 unchanged. All these you will see is the entire list of these SGBs that you can see right now. Okay, so okay, ठीक है, I've understood all these are trading on the exchange. I can see the LTP here also, correct? The LTP that we are going to discuss with the help of an Excel sheet also. So all these things I can see, agreed. But how do I choose which SGB can be the best in 2026? That's exactly what we're going to discuss in the next section of the video. Now, while choosing the best SGBs, two components become extremely important. Number one is YTM. That's what exactly we talked about right now. In YTM, I told you three components. Which are the three components I talked about right now? One was about the discount to the current market price. Second was about the coupon. And third one was about the capital appreciation. We did discuss about that. And second one that you should check is time to maturity. Because whenever gold bonds are issued, they come with some maturity period, right? Typically, all gold bonds come with an 8 years maturity. So you can imagine some gold bonds were issued last year, some were issued like 3 years ago, some were issued during COVID, some were issued maybe 1 or 2 years prior to COVID, whatever is the case. So every bond is going to have a different maturity period. So typically what happens is that if the gold bonds are currently trading at a discount to the current market price, okay, remember this as a thumb rule, that discount will fade away at the time of maturity. So at the time of maturity, because why am I saying that? Understand the logic behind it. At maturity, you are going to get whatever is the current market price is what you're going to get as the redemption price, correct? So there is again a calculation for that, last 3 days average and all that. But just for simplicity, whatever is the current market price, that is going to be your redemption value. Okay, you're going to get that if you're getting the gold bond today at some discount. That's what I'm trying to tell you. That discount will eventually fade until maturity. It will go off until maturity. So higher the discount right now, better it is going to be for you. And discounts could keep on going if the maturities are of longer dates. So if you didn't understand last 1 or 2 minutes, just remember this. Discounts typically will fade till maturity date, on the maturity date. If the maturities are long, discounts could continue for a longer time. Okay, so what makes sense? If you are trying to choose maturities, which are like short term maturities, you will ideally get a better YTM because the discount is going to be what you're going to pocket within a smaller time frame. Okay, can we do some calculation for that? And answer is yes. And you can see, whoa, this big Excel sheet that we have prepared. Some things we have manual input, some with the help of AI. Okay. Now you can see all those. By the way, the NSE website that I showed you right now, that if you go to the website, there is an option called as download CSV. So we basically downloaded the data from there, and you can see all these bonds that were listed. All are listed here. We have put the maturity date, the current date, years to maturity. Okay, just to give you a simple example, let's say May 2026, which is going to mature in next 2 months. How many years to maturity? 0.13, because it's less than a year. Okay, then you can see the issue price. You'll be like, Rachana, why have you talked about issue price? Because you're going to get 2.5% interest rate on what? On the issue price. So it was very important for us to jot down the issue prices here. And if you remember, I told you that 2.5% are you going to get at the time of maturity? No, you are going to get it as a semi-annual payment. So you will get 2 coupons per year, right? Now I'll give you an example. Again, I'll continue the same example of May 26. Here you can see coupon left 1. Why? On the maturity or at the maturity, the final coupon will be paid. So May 26 will be the last coupon payment. So only 1 is left. I'll give you one more example. If I'm talking about the bond which is going to mature in November 26, for that 2 coupons are left. How? Because semi-annual payment. November 26 will be the last coupon payment, and 6 months prior to that, that is May 26, will be the second penultimate payment. Okay, so 2 coupons left. Likewise, you can see higher coupons, higher number of coupons, so 10 coupons remaining for what? December 2030 maturing bond. I hope this is also absolutely clear. And with that, we have calculated how much will be the semi-annual coupon, that is semi-annual interest. Okay, and with all these things into consideration, LTP minus your NAV, which is the gold price. Actually, you'll be like, how did I calculate this NAV or gold price today? That you can get with the IBJA website. Again, it's the official website, which is the Bullion Association, Indian Bullion Jewelers Association website. That link also I'll give you in the description box. Okay, it's simple. If you click on that, you'll directly get the price for gold today. Okay, so this is the gold price today. This is the Acha, by the way, gold price, 1 gram gold price today. Same purity, you are getting SGB at 15,246. Can't you see a discount visibly right now? And all these bonds have different discount rates. So you can calculate the discount with this minus this, number one. Number two, if you remember interest payment, for that we have calculated the semi-annual coupon. And finally, it's about the price appreciation. That was the third element. For price appreciation, I don't know what will be the gold price as at maturity. That I'll have to assume. What can be a logical assumption? Logical assumption is what is the inflation, what could be the inflation adjusted price? You'll be like, why are you putting inflation here? Because gold is considered as a hedge against inflation. So what I've done is, typically inflation is 6 in India, I agree, but I said at least 1% extra, let me give to gold. So whatever is the current NAV of gold, current market price of gold, I have increased that with 7%, 7%, 7% year after year. Okay. Now, so for example, if I'm talking about, even though current NAV is 15,644, now let me take you to a coupon of 2030. See, 2030, for that projected NAV, it's coming to 21,037. Why? 77% have inflated annually. But if I'm talking about SGB of May 26, I have not inflated 15,644 into 7% directly. That's for 1 year. So pro rata for whatever 0.13 years. How much? That is how I've calculated the projected NAV. Okay. With all these things, Acha, one more point. If you want to know few more details, see, I'm telling you the logic behind this Excel sheet. Otherwise, I can directly sort the inflation adjusted IRR, highest to lowest, khatam. These are the top 5 SGBs. But I feel you should understand the logic behind this Excel sheet also, right? So what we have done is that, why IRR? Because you are going to receive these cash flows, these coupon payments at different points in time in the future. So whatever future cash flows you are going to get, we have to discount that to the current market, okay, to the current date. All these calculations are done using IRR. We've done all these calculations, and finally now I will sort it Z to A, highest to lowest. So the coupon, so the bond which is giving us highest return, highest IRR, okay, for the descending order, I mean highest to lowest, you can see May 26 SGB is giving us the best returns, followed by November 26 SGB, followed by October 26 SGB, followed by Jan 27 SGB, and ultimately it is December 27 SGB. All these are the inflation adjusted IRRs, okay, internal rate of return, and this is your annualized IRR. Okay, so don't be under the assumption, acha, May 26, right now it is March 26, so in 2 months I'll get 16.5% returns. No, this is annualized return that I have talked about. Okay, wow, I'll be very honest, it took us quite some time for us to actually do this entire Excel. We also took some help of AI, but cross checking everything, we did that. We are trying our level best to automate this entire Excel sheet and automate this as a tool and put it up on our website rachanaranade.com. If we succeed before release of this video, I'll put the link of that tool in the pinned comment and in the description box. And I've given my IT team 1 month's deadline, so keep on checking the link of this video and the pinned comment, so that whenever we come up with this, we'll put that tool link in the pinned comment description box so that you can do it by yourself as well. Ultimately, let's move on with the risks. 3 key risks that that we can discuss. One is liquidity risk. There could be some SGBs which you are getting at good discounts. You are getting at good discounts where the IRRs might also be very good, but the problem is that they may have lower trading volume. So whenever you want to sell it, maybe there is no buyer. Okay, so ensure that the liquidity is good enough for the bonds. Number 2, the bid ask spread. The price at which sellers want to sell is wanting to sell versus price at which buyer is wanting to buy. If that is a big difference, we call it as bid ask spread is high. So ensure that it's not pretty high. It ideally has to be on a lower side. And number 3 is the gold price volatility. Right now I told you that ideally 7% return is bare minimum that we should expect, but what we have seen is that gold prices rose very rapidly in the last 1 year. They also fell pretty rapidly. So could there be gold price volatility as well? Answer is absolutely yes. These could be the 3 risks. What could be a bonus tip for this then? Bonus tip could be having a laddering strategy for SGBs. I will be like, what is this? So laddering strategy basically in simple words means that don't buy only one SGB, have a portfolio of SGBs, have multiple SGBs, so that even if there is some gold price mispricing, it will not be for all SGBs. Buy a few SGBs for a short term, buy a few SGBs for medium term, buy a few SGBs of long term, and ensure that they are maturing at different points in time. Okay, so with that you can have a nice bouquet of SGBs. I hope you found today's video interesting. If you did, please don't forget to smash the like button. Please don't forget to share this video with your friends. If you have still not subscribed to the channel, do consider subscribing it. It's free. So I'll see you in the next one. Till then, take care. Jai Hind and bye-bye. You might have come across such advertisements on various social media platforms. Please note, all of these are fraudsters promising unbelievable returns through stock tips. I don't provide any calls or advisory services. I provide only educational content through my social media handles and through my website rachanaranade.com and rachanaranade.in.